Welcome to the Rate Update with Dan Frio. I, of course, am Dan Frio. Today, crazy. Between D.C., the Federal Reserve, and a whole bunch of other stuff. It was a crazy time in the markets today. So don't go away. We're going to show you what happened with rates today, as well as we're going to start reviewing what the stock market is doing, because that plays a big role in what housing is doing, as well as interest rates. Don't go away. Well, the big news for today was Biden was brought in as the next president. And kind of glad that fiasco's over, if it's over. So only time will tell. Please, no comments down below. This isn't a political channel. I'm just throwing out some comments there, because all this stuff affects what the stock market is doing, thus in turn what interest rates are doing, thus in turn what housing is doing, and all this wraps together what we're talking about. So today some information come in from the Fed, and they came out with some news from their last meeting of last month, and it was actually really good news. I'm going to go over that in a second, and then what happened today with bond yields and mortgage rates. So let's get at it. You see, the market will get plenty of notice before the Fed cuts on bond purchases. So what's happening with this? And why do we care on all this? Well, the biggest thing is this number right here. We follow this number, and people that have been following me for years watch daily to see what this number is doing. What is this number? Well, this is the mortgage-backed security number. What this number is right here is what's happening to the price of the mortgage-backed security bond, okay? As this price goes down, mortgage rates go up, all right? And we've seen a huge move in the market in 2 days. So again, guys, bad news. This means rates are going up. Pay attention to this, because some of the news that I'm going to go over in the headlines doesn't make really much sense. And I'll bring that up. I'll say, told you so, when I get to that level. So what happened back when is this is what's happening to mortgage-backed security prices. As the price goes up, the yield or your mortgage rates come down. This is the biggest piece of the puzzle when it comes to mortgage rates, okay? Well, the Federal Reserve stepped in months and months and months ago, and they said they're going to buy back bonds. And they're going to buy mortgage-backed securities bonds as well, when needed, to stabilize the market from huge volatility. They've done a fantastic job. That's basically where the equilibrium is. All right, so there's a line here and a line here that you're going to see. These are the Fibonacci levels. These are basically floors and ceilings that we should be trading through. All right, if you go back to my video on Monday, my concern was we kept hitting this top Fibonacci level right here, and we were hitting resistance, and it's right dead there. Bam, 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 bam. We've hit it 5 times in the last 2 months, and we cannot go over it. So my thought was we're probably not going to push past this, okay? But the fear that I had was, look at the resistance. We keep hitting the ceiling and won't bust out of it. Well, conversely, where's the floor? The floor is all the way down here. So I'm like, my concern is if we keep bouncing off this and we don't hit we keep getting resisted, we're probably going to see a pullback. And my assumption would be we'd have a pullback right in this area here, which is our 25-day moving average. If you look at the numbers here, 25, 50-day, and 100-day moving average. That's what DMA means. You can see the purple line is the 100-day, black line is the 50-day, brown day is the 25-day. So that's where we're trading, and that's where I thought we would find equilibrium. But we didn't. We went down. We're all the way down now to the 50-day, and we're hitting some resistance there. You can see we've dropped down almost to the 100-day moving average. I didn't think we'd see this in 2 days, but we're seeing it. Guys, this is a big move. I think we're going to find resistance here. But with all the turmoil going on everywhere, you see rioters in the White House and protesters everywhere, and the stock market's going bonkers, and then it made a reversal. The NASDAQ was way up, and then it reversed back into negative territories. So we're having a turmoil everywhere. We're in uncertain times. So that's basically what's going on here. But the good news is the Fed is going to continue to buy mortgage-backed securities to stabilize the market. That's why I feel that we should be getting back into this range here in the next couple days once all cool heads prevail. Okay, so that's what's going on here. Let's see the intraday chart. And we're going to go through the whole day. We opened up here, we dropped, and then the nice thing is we started to stabilize. We like stability through there, so that we stabilized throughout the day. News for today, though, there wasn't, the stock market jumped big, which was good. I'll take it. The Fed came out, and again, they said that they were going to continue to buy bonds, thus keeping mortgage rates and everything in line. Employment numbers are coming in bad like usual, but what do we expect until the virus or the antibody starts to really kick in and gets throughout the whole country? We're going to still see this mess, this pandemic, for the next 60, 90 days. So I don't see the first quarter of 2021 being much different of where we were at the end of the year. However, I think when spring hits and summer hits, you're going to see a lot of good information where a lot of good things come out. So here's my expectations, is now we have a lot of the uncertainty out of the government out of the way. Here's where I'm kind of at a fork in the road. The government that's in place, that's going to be in place, is a lot more stimulus happy. I'll put it that way. So they're going to be pumping more money into the economy. Well, that's good for the short term and good for those that need it. Unfortunately, you have to pay for it at some time. So let's say we're going to go to Hawaii and you just go gangbusters. You just and you're having a great time. 2-3 months later, you're like, oh boy, I got to pay for this. Was all that great time back there worth what's going to happen? So we're most likely going to see higher taxes, rates are going to move up, and so forth. So enjoy it while you can. Take advantage of a lot of this stuff as you can. And, we don't know what tomorrow's going to bring, so work the best with you. That's why I'm out here trying to post this information to you guys to keep you informed of what's going on in the markets. So that's what my prediction is there. So I don't really see much happening other than rates stabilizing at these levels. You probably will see the $2,000 stimulus go through and some other things that'll help out. But until the vaccine gets everywhere and people start getting really back to work, which I see in about April, May, I got a feeling we're going to have a fantastic summer in the housing market. And for those that are looking to refinance, I would highly suggest you do that now. Don't put it off any longer, because we probably saw the lowest rates we're going to see in our lifetime. All right, so that's all of that information. Mortgage news for the day. I'll be posting this here shortly as soon as the last revision comes out, and it just popped. Crazy day for bonds. Is the worst over? I can see us stabilizing at this point, but again, rates have already pushed up from the bottoms that we were seeing for a while. Okay, so that's where we are. A lot of people have asked me, Dan, you say it's the rate update, but you don't give us rates. Rates are tough because they're a caption of a little specific time, a little snapshot. It's one day or one afternoon of the time frame. So if you'd like to get a free mortgage quote, please do me a favor, and I'm going to show you that information here. But if you're in the middle of a mortgage right now, you're building a home, buying a home, refinancing or whatever, you would have received from your current lender what's called a loan estimate. Please email that to me to get a second opinion. I'll leave it at that. If you're at a rate at 4 or higher, we have a lot of clients right now at 3.75 and in that range and higher. They're looking to refinance, and a lot of it's paying off. We just took one client and put him into a 25-year term versus a 30. Their payment went down $100, but they cut 5 years off of their term. So think about it. Your payment's lower and you cut the term. It's a win-win. So there's a lot of potential out there for a lot of people. There's trillions of dollars in loans out there for people who have rates that should be taking advantage of these low rates. I would not sit on the fence anymore. I would jump in, and if you waited this long, don't wait any longer. That's all I can advise you, because I see rates stabilizing, and then in March, April, May, you're going to start seeing rates go up. So that's my prediction there. If you like what you see and you're like, Dan, how do I get in touch with you guys to have you or your team help me and at least answer some questions and review what I have or what I'm some other places offering? Go to therateupdate.com. Scroll down. Here's our 800 number. It's 844-775-LOAN. It's 844-775-5626. Or email me your loan estimate or your mortgage statement or anything that you have you want me to review. Email it to me at dfrio@preferredrate.com. If you want to get a free quote, click here and fill out the information. Somebody will probably be on the phone with you in about 15 minutes. You can apply right here if you just like, I need pre-approved. What do I do? Well, if you're looking to pre-approve to buy a house, click this right here. This is a little, we call it a funnel. It'll ask you questions and it'll help us determine the best program for your scenario. If you're looking to refinance, this is the same steps. Click this, it'll go through it and help us determine what's the best program for you. This is a computer system. I review all of these to make sure you are specifically getting into the right program. We're locking you at the right time and we have the right fee structure in place for you. Other than that, all I got to ask is, if you would, please give me a thumbs up. Subscribe down below. That helps the algorithms through YouTube get me posted in more spots and allows me to help more and more people. And click the bell so every time I do post a video, you get an alert and hopefully you watch it and you enjoy what you see. So I hope you like my videos. Please leave some comments. I want to know what you guys are thinking. What other things do you want me to answer? Tuesdays, I do a rate Tuesday where I compare my rates to rates all over the country to show you guys we have not only the best rates in town, the lowest fees in town, and we have some of the best underwriters and staff in the business. So God bless, take care, see you tomorrow.